What's up, everybody? Welcome back to Investor Central Club. I'm your host, Max Pitts, and today we are talking about WaveX, the flow scanner from Investor Central Club that shows you what the big boys are doing. And by big boys, I don't mean your uncle who owns 4 Dogecoin and a timeshare. I mean hedge funds, institutions, the guys who are wearing suits and ties in their LinkedIn pictures and say they work for Wells Fargo. The guys who can move billions before lunch and still have time to ruin your short position by 2 p.m. Eastern. Today's example, well, we're going to use the one ETF to rule them all. SPY. Think of it as the S&P 500 in yoga pants. Everybody trades it, everybody watches it, and like yoga pants, sometimes it hides things you just don't want to see. Anyways, let's break down this chart before your eyes glaze over, and make sure you like, subscribe, smash that bell notification so you never miss trades and gains tool breakdown video. So first things first, the yellow line. What is that? Well, that's the spot price. That's just SPY, actually the trading price. Easy, right? Simple. Yellow equals SPY's trading price. Remember that. The green line down here, well, those are calls, bets that the market is going to go up. The red line, well, that's puts, bets the market's going down, or what we like to call it, insurance, right? Now, that red and green bar at the bottom down here, this guy right here, yeah, well, that's the aggregate premium, the net money flow. Red means more bearish money flowing in. Green means bullish whales actually showed up and decided to play some ball today. As we can see, we saw mainly red here. And the easy way to know that is between how many puts versus calls we can see. So we can see here 75 million in puts versus 9 million in calls, gives us an aggregate premium of 84.97 million with puts dominating, as we can see up here. So SPY today, well, the price went up. Calls stayed flat and puts went up, and the aggregate stayed blood red. Translation, the market looked strong, but the money didn't believe it. It's like a politician saying everything's fine while quietly building a bunker. Now, lesson 1, look for divergence. If the price is going one way, but the options flow is going the other, that is your first signal. Today, SPY's price climbed a bit, but puts exploded higher. That's institutions hedging while retail piled along. That's divergence. And a clue that maybe this rally is on borrowed time. Apply this to any ticker, NVDA, Tesla, name your poison. If the stock price is rising but call flow isn't following, that's a yellow flag. The money isn't backing the move here. Now, lesson 2, watch for spikes. See those moments where the red line suddenly jumps, as we can see, like here. We have another one here early in the morning and another one up here. Well, the green line also is going to take off like a SpaceX rocket. Well, those are institutions making waves. Retail doesn't buy 50 million worth of puts at 2:30 p.m. unless your name is Chad and you just got margin called out of Tesla. Spikes in premium equals somebody knows something. It could be earnings, Powell speaking, or just overall hedging in the market. But that's where you look for trade setups. Now, lesson 3, watch the aggregate. This is the big bar at the bottom that we mentioned earlier. Now, you're going to want to watch that. Think of it as the scoreboard. If it's red all day, even if price is going up, that's bearish positioning. If it flips green, that's bullish money finally starting to step in. For SPY today, the aggregate never went green. Not once, not even for a little bit. That tells you this entire day, the big money leaned bearish. And here's the kicker. You can apply this to any ticker. If you see NVIDIA's price dipping, but the aggregate premium flips green, that means whales are buying the dip. That's your signal to maybe join in before the rocket takes off. Now, don't get me wrong. This is not a crystal ball that we're giving you by any means. It's not Hogwarts, and my name isn't Hagrid, and you're not Harry Potter. You can still get faked out. Sometimes the whales hedge. Sometimes they're just bluffing. But would you rather trade blind vibes or have actual x-ray vision into where billions are moving. This isn't guesswork, it's reading the tea leaves, except the tea is made out of hedge fund money. So let's recap. SPY today, well, it looked bullish on price, but WaveX showed the money flow was bearish. The lesson, don't trust price alone. Follow the flow. Use divergences, spikes, and the aggregate bar to spot trades. And apply the same strategy to NVDA, TSLA, AMD, Apple, anything you want. The world is your oyster. We're just giving you the tools to shuck them. This is how you stop being retail exit liquidity and start following the smart money. It won't make you Warren Buffett overnight, but it will make you a lot less like the guy who bought AMC at $70. So yeah, that's WaveX 101 for all of you. You can use it to see through the noise, track the whales, and maybe stop setting your money on fire in weekly calls and zero date to expiration trades. Now, smash that like button, drop a comment if you've ever panic bought SPY puts at the top, and I'll see you degenerates next time as we start to break down more tools. Love you guys. Have a great night.